Okay, so look, oil and gas is certainly an interesting market to be in at the moment. Prices are looking good. People are out there exploring and finding and producing. So without too much further ado, I would like to introduce to you tonight's first speaker, who is Damon Neaves, the Managing Director of Finder Energy, who was listed on the ASX by JP Equity last month. Damon has over 18 years' experience in leadership roles as an oil and gas executive in both private and ASX listed companies. He has extensive experience in international oil and gas projects in the Asia Pacific region and Europe and also Africa. Damon's experience spans the full cycle of the oil and gas business, from new ventures, exploration, development and also production. Ladies and gentlemen, please welcome to the stage Damon Neaves.
Thank you, Matt, and good evening, ladies and gentlemen. It's a pleasure to be here as part of tonight's lineup. So Finder, as mentioned, we've only been listed for a month or so, but as a private company, we've been around for some 17 years. And in that time, we've built a diversified portfolio across two of the world's premier hydrocarbon regions, offshore here in the Northwest Shelf off WA, and the UK North Sea. In terms of our track record, we've had 4 discoveries from the 7 wells we've drilled in the Northwest Shelf, so something like a 60% strike rate on exploration wells. But what's been unique about Finder has been our ability to do deals with industry, and through those deals put money back in the bank, return value to our shareholders and get carries through work programs, including drilling activity. And in fact, we've been so successful at that even as an explorer, we've been cash flow positive. So Finder's a unique model. It's a proven model and a sustainable exploration model that's been developed over many years. And today we find ourselves with perhaps the strongest portfolio we've ever had, across 2 very stable, very mature hydrocarbon regions. And we've been waiting a long time for conditions in the sector to be so strong, with oil back again over $100 a barrel, and producers breaking records, and we'll see once again records smashed this quarter. But these are the groups, they're the counterparties to our farm out deals. And so when oil price is high and the industry's cashed up, that's when our strategy can really generate value. Tonight, I'm going to talk to you about a big catalyst that's unfolding right now. We're drilling our Kanga-1 well in the northern Carnarvon Basin. It's targeting a big oil prospect. It's 170 million barrels gross. And the rig's arrived at location today. It's putting out its tankers, and we spud the well and start turning the bit tomorrow. So look, I'm just going to briefly touch on this slide, but I didn't include it in the plaque because it does show Finder's history. It tells a bit of a story. It shows the kinds of counterparties we deal with on our farm out transactions. As you can see, they're super majors, they're large independents, all multi-billion-dollar groups that have the balance sheets to take drilling and exploration risk. So Finder's farm out strategy is all about shifting risk. It's making sure the company's not exposed on drilling results, but that our shareholders have leverage to any success. You can also see there on this slide the wells we've drilled and the discoveries we've made over the years. Even up and down through the cycles, we've maintained an active portfolio, and it's because even though we're a junior, we typically run at 10 or so projects at any given time. So it's a pipeline of activity and throughput of news flow and catalysts. So just a snapshot of our Northwest Shelf position. It's always hard to comprehend the scale of the Northwest Shelf. This map shows thousands of kilometres of coastline, and in fact, before Finder listed a month or so ago, we were the largest private company acreage holder in the Northwest Shelf. So you can see our acreage is largely centred around the northern Carnarvon basins, the very oily part of the northwest shelf, and the Vulcan sub-basin, another oily part. So we're focused on looking at big oil targets. One of the reasons for that is the groups we deal with, to move the needle for them, they need to be drilling 100 million barrel targets. And that's what our approach is all about, is generating prospects for these groups to drill. So this is what I came to talk about. This rig is the Ocean Apex. It's a semi-sub. It's arrived on location at Kanga Well. You can see from the map there, Kanga lies just west of the Mutiny or Exeter oil field, a field that produced something like 100 million barrels. It was a prolific rate. And Kanga's in the same sort of reservoir seal pairing, same play. The risk around Kanga is really if that structure's charged. And ERCE, our independent experts who did the work for our prospectus, gave it a 36% chance of success. The thing about Kanga though is it's big. You can see the mid case or best case there, labelled 2U in that chart, is 170 million barrels. We're net 15% or over 25 million barrels in that mid case. So if you think about Kanga's success in terms of perhaps what Dorado was like for Carnarvon, who's going to speak after me. I mean, this was a real company-making event for them as the junior partner in that discovery, and I think the phase one development of the Dorado liquids is about 170 million barrels also. So this is a Dorado-like event, obviously Carnarvon with a market cap of several $100 million. Find us starting out with a market cap of around $30 million. So we would expect a big re-rating off the back of an event like this, a success, a mid-case outcome. So it's a great way to start, and to just demonstrate how our farm out strategy works is, this is a US $35 million well that's largely funded by our partner, Sapura IMV. We have Finder has a fixed capped exposure in that well of less than $1 million. So the thing is here, we've got an asymmetrical risk-reward situation where the company's not got a lot at stake in financial terms, but our shareholders have massive leverage if we're successful. Now, Kanga's won well, and it will be success or a failure. It'll be a binary outcome. So beyond Kanga, we've got 10 other projects, all covered with 3D data across the UK and Australia. And we're going to take all these projects to market, look for partners and put more wells on the agenda until we do get one of these discoveries and build a genuine E&P company off the back of that. And on that note, this is the Dorado play shown on this map. The orange outline is where we define that Dorado play. You can see the Dorado field there. Biggest discovery in the Northwest Shelf in 30 years. It will be the biggest oil field under development in Australia soon enough, and I'm sure you're going to hear from Thompson about Dorado, but just an absolutely cracking field. Our block's shown there in the white, and we've mapped a string of prospects, all over 100 million barrel targets in this play. The play just keeps getting better. We've had something like 9 out of 10 wells in the play encountering hydrocarbons. Parvo was another incredible result, booking another 40 million barrels, potentially 90 million barrels in that play. Tells us that oil in this play is prolific. The migration is travelling a long way, and it's all adding value. All this money that Santos is spending de-risking this play is adding value to our block. So we think our block there, 547, is some of the hottest property in oil and gas terms in Australia right now. We're the only company with 100% equity in acreage in this play, and this is one of the blocks we're engaged with industry with a view to farming out and getting these targets drilled. But I do want to mention our North Sea portfolio. This is something we've put together over the last couple of years. like Australia, we're right in the heart of the oil production in the North Sea off Aberdeen. This is the central North Sea. Our block's shown there in the white. We're around giant oil fields like the Forties field, the biggest field in the UK, over 2 billion barrels, and Buzzard, another billion-barrel field. And we're mapping up analogues in that same play. We picked up this acreage in the downturn. We're seeing an extraordinary recovery in the industry in terms of investment activity, and Finder's well placed now to take all these blocks to the farm out market, partner up and get wells drilled here. So look, in closing, I just want to touch on our capital structure. One thing that's important to us, that if shareholders come on the journey with us, take exploration risk, we want them to be rewarded when we're successful. So we've listed with 150 million odd shares, a market cap of around 30 million, an EV of around 25 million. And we think, even if Kanga's a dry hole, we think that EV is substantiated by the balance of the portfolio. This was an IPO where there was no seed rounds, there was no discounted or cheap stock. Everyone, including myself, got in at 20 cents, and I know many of you out there tonight are shareholders. And I thank you for your support. Look forward to reporting the results of Kanga as we drill ahead tomorrow, in the weeks to come, and we should have well results there on whether there's been a discovery by early to mid-June. Thank you very much.